CISI CME-1A. This is a 20 flashcard revision challenge. Answer each question before the countdown ends, then check the explanation. Question 1. What is the primary function of the financial services sector? Answer. To channel money from savers, those with a surplus, to borrowers, those needing funds efficiently, enabling economic growth and wealth creation. Question 2. What is the role of a custodian bank? Answer. Safekeeping of securities, settling trades, collecting dividends and interest, and providing reporting services for institutional investors. Question 3. What is gross domestic product, GDP? Answer. The total value of all goods and services produced within a country's borders during a specific period, used as the primary measure of economic output. Question 4. What is monetary policy and who controls it? Answer. Monetary policy manages the money supply and interest rates to control inflation and support growth. It is controlled by the central bank, e.g., Bank of England, Federal Reserve. Question 5. What are ordinary shares, common stock? Answer. Ownership stakes carrying voting rights at general meetings, participation in dividends declared by the board, and the right to share in residual assets on liquidation, after all other claims. Question 6. What is the difference between a primary and secondary market? Answer. The primary market is where new securities are issued, IPOs, rights issues. The secondary market is where existing securities are traded between investors. Question 7. What is a bond's coupon? Answer. The fixed annual interest payment made by the bond issuer to the bondholder, expressed as a percentage of the bond's nominal face par value. Question 8. What is a zero-coupon bond? Answer. A bond issued at a discount to par value that pays no periodic interest. The investor's return comes entirely from the difference between the purchase price and the par value received at maturity. Question 9. What are money market instruments? Answer. Short-term borrowing lending instruments, generally under 1 year, including treasury bills, commercial paper, certificates of deposit, CDs, and repurchase agreements, repos. Question 10. What is the foreign exchange FX market? Answer. The largest and most liquid financial market globally, where currencies are traded 24 hours a day. Rates are quoted as currency pairs, e.g. USD. Question 11. What is a derivative? Answer. A financial instrument whose value is derived from an underlying asset such as equities, bonds, commodities, currencies, or interest rates. Question 12. What is the difference between a future and a forward? Answer. Futures are standardized, exchange-traded, with daily margin requirements. Forwards are customized, traded OTC, settled at maturity, and carry counterparty risk. Question 13. What are the main benefits of collective investment schemes? Answer. Diversification, professional management, economies of scale, access to otherwise inaccessible markets, and regulatory protection. Question 14. What is an open-ended fund? Answer. A fund that can continually create and cancel units shares based on investor demand. The price reflects the net asset value of Examples: unit trusts, OEICs, mutual funds. Question 15. Why is financial regulation necessary? Answer: to maintain market confidence, protect consumers, reduce financial crime, promote competition, and ensure financial stability. Question 16. What are the 3 stages of money laundering? Answer: placement, introducing criminal proceeds into the financial system; layering, disguising the trail through complex transactions; and integration, using the cleaned money in the legitimate economy. Question 17. What is the difference between a defined benefit (DB) and defined contribution (DC) pension? Answer: DB guarantees a pension based on salary and service years, risk on employer. DC builds a pot based on contributions and investment returns, risk on employee. Question 18. What is a mortgage? Answer: a loan secured against property. The lender has the right to repossess the property if the borrower defaults. Types include repayment, capital plus interest, and interest only. Question 19. What is a fact find or know your client process in advice? Answer: gathering detailed information about the client's financial situation, objectives, risk tolerance, and personal circumstances to ensure suitable recommendations. Question 20. What is suitability in financial advice? Answer: the requirement that any product or service recommended must be appropriate for the client's specific needs, objectives, financial situation, and risk tolerance. Continue with the complete course at Exams Academy.